There we go. Good morning. Looking good. You guys ready to do some Forex? Welcome to Forex.Today, the YouTube community of more than 18,000 foreign exchange traders. They will do technical and fundamental analysis. Dollar pairs, yen pairs, gold, oil, Bitcoin, and whatever you want. I will do my best, if you ask questions, to give you what you need to succeed, baby. This is your hour of power. Let's get on with it. Let's go. Okay. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Morning. Happy Friday. My name is Wayne. I'm a currency trader just like you, and I am facing the same markets as you. I have the same information as you, but we also have the same information as successful hedge fund managers, institutional investors, central bankers, wealth managers, so on and so forth. Cool. So we all have this information. We need to make decisions. And of course, the better the decision, typically the better the reward. Most people don't make decisions at all. They just react and boom, guaranteed poverty. So thank you for being here. Thank you for being a positive part of our community, asking great questions in the chat, posting great comments under the recordings, and supporting each other in this thing we call Forex. I think that's really cool. I'd like to thank Traders Way for being part of our community. Hey, if you need a broker, visit tradersway.com. Give them an opportunity to earn your loyalty and respect. For example, you could click right here. This is Forex.Today. I'm on the news calendar. You can click right there. ECN accounts, you got it. Fixed spread accounts, you got it. Variable spread accounts, you got it. MT4, MT5, it's all good. But I have a Mac. Well, I think that's okay too. So anyways, traderways.com. All right. From India, I am a beginner and I want to learn Forex fundamentals and strategies from you. Cool. You can go visit FX Bootcamp and take the fundamentals trading course. I got you. Okay. Just today's news. Pretty decent CAD jobs report. Unemployment fell from 8.2 to 7.7. Huge change. So there must have been a big jump in the participation rate. The number they were expecting -70, but they got it plus 200. And, the Canadian jobs report, I don't know what methodology they use. Literally, I don't know. But it's amazing how they do this a lot, where they're like, -70? You're like, no, plus 200. You're like, oh, okay. It's not even close. It's not even close. It's not even close. But anyways, that's good numbers. 8.2 down to 7.7. So whoop whoop to the Canadians, eh? GDP. Okay. Industrial production. Manufacturing production. Is that a negative? Right. So anyways, the UK struggling, hun. Quite right. Cool. So anyways, neato. What you want to do? Let's start with the indices, and you may see, ooh, nice. Now that's hopeful, eh? This is hopeful. This is very, very hopeful. This is hopeful. One of the themes that I have for this week is any last people that want to get out of the market are going to try to get out of the market. And then by today, by Monday, whoever's going to trade the summer is going to be here, and everyone that's going to leave for the summer is going to leave. Cool. So this kind of supports that hypothesis, because I don't know when people are going to go on vacation, but I like to see the dollar weakness because I'm a dollar bear. When I see dollar weakness, first thing I want to check is, hey, is there yen weakness? Yes. Yes. So that's good. So I think, maybe this is risk on. So that means Aussie could recover, Euro could recover, Kiwi could recover, Pound could recover, CAD could recover, and Swiss should weaken. Oh my God, Becky. Oh my God. Does that look good? This is what Jean-Guy's been looking for. So that is very, very hopeful. That is very, very welcome. Very welcome. So let's try to thread the needle here. Okay. What do I want to look at? Goldie? Nah. Ethereum, Bitcoin? Nah. Gold? Nah. Maybe we could look at gold just briefly. We're looking at two scenarios for gold with different outcomes for each scenario. And it was like, yeah, but yeah, wow. Okay, so the big story that you see here, and I don't have my drawing tool. This is just from yesterday. We had a trade plan on our swing trading team about gold, and I'm like, well, you got to be careful with gold. I said, I like the idea with gold, but you're going to be challenged by a lot of dollar traders. And I think maybe we were just here. And I'm like, well, you got to be careful. Holy smokes, huh? Yeah. So anyways, we'll see. We'll see what's going on here. Okay. So odd, but let's just move on because I'm much more interested now. Like, are we going to get some dollar trades going? Okay. All right. This is good. I'm loving it. Okay. This is neat. This is very neat. This could be good. This might be something that we've been looking for. Okay. So we have to analyze, okay, break out of the range and pullbacks. So you got really big questions here. Okay. Okay. This. Do I have any current condition positions? Not really. Nothing. What I've been holding for a long time. So nothing really new. Because, 2 weeks ago was a time to get out. And so now I'm just wondering, should I be getting back in? Okay. So nothing really new to report. All right. So here's the big thing though. Will there be? So I've already identified this as sort of an inside range, and then there's an outside range. And one of the things we need to be looking for, if you happen to be a bull over the next period, is, can we sustain upward move? Okay. So I already got this one marked out, you see? But as we start climbing, things could get better. Now, full disclosure, what I think is likely to happen is some up and then have it all the way come back down. Does that have to be now or this week? No. And does it have to be that way? No. So if you're going to be buying what we called yesterday in the swing trading group as value positions, which is a type of strategy that you can conduct in the summer retracement versus momentum trading, right? So we were looking at the value would be looking for something like this. And this is exactly what you kind of want to see, upward moves. And maybe the thing is, I don't know, and I have doubts, but maybe what if it actually breaks that high? Right? Wow, that would be cool. I don't expect it, but it can happen. I don't expect it, but it can happen. So this is interesting because now that doesn't look like falling lower lows. So that could be a change of trend. We don't know. We haven't confirmed it yet, but it could be a change of trend, right? And that's what we're looking for. So dropping into the hourly chart, okay, one of the things that I find loufle is this. that on this pair we had the down, 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 up, up, sell, pretty obvious. Down, 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 up, sell, pretty obvious. It's just a role reversal. Down, 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 up, sell, right? If there were sellers there, that's where they would have sold. Holy schnicker schnocker, what are we doing up here with this higher high? And that's where you set up the 1, 2, 3 role reversal. Holy smokes. Holy smokes. Somebody took it. To me, that's a bull. Okay? This is bears exiting. And this is bulls buying. Nice. Like, to me, it's like organic material that's alive. Do you ever see Wall-E where he finally finds the plant? Wall-E. Right? He finds life. Finds life. You're like, that's it. That's the thing I've been looking for. Maybe, right? Right? Eva. Wall-E. Great movie, by the way. That is Lufle. Lufletuliumum. Huh? My wife told me yesterday, stop saying that. I'm like, oh, did I just say it 3 times? Yeah, I got to stop. That is interesting. There's a lot of hope behind that setup. There's a lot of hope. That could be really good. Now I think we're going to come here, and then we're going to come here, right? So this is what I'd like to see. This is what I think will happen. William liked that. That was good. Right on, man. All right. Neat, right? Cool. I love that. I love that. That makes me feel good. So maybe we should highlight this. You're like, hey, let's highlight this. And I say, hey. So we throw this down and say, ooh, it's easier to see now, right? So on the longer run, maybe there's still a downward pressure, but in the shorter run, there's opportunity. Okay? And this is why I say, like, I kind of feel like it wants to do this. Well, you can see we can be overbought and then oversold, or trading a mean somewhere in the middle. And not, I said mean, not meme. All right. You see? Is that, hopefully that tool's helpful. Okay. Keeps you focused. It's sort of like momentum and value combined if you're trading, if you want the uptrend. So that is cool, man. So I'm very hopeful in the pig. I'm very hopeful in the euro. We have a couple of dogs here. We have Kiwi and Aussie. Let's check in on them. And has there been a change of trend? Maybe that's easier to spot. So remember, on the way down, I had this set in green, meaning on the way down, I still wanted to be a buyer. Even though it wasn't a buying opportunity, I wanted to be a buyer. So the way I read this, actually, is exactly, that's exactly what I see here. Which is funny. I'll redo it, though. So the plan is probably something like this for Monday. And this will, if we make a little bit of a higher high today, what is this, hour? Yeah, if we can make a few more green candles, then this will rise up. Although 74.50 is probably a good number. But nonetheless, maybe this rides up. Okay, and this is next week, Monday's trade. Yeah, Robin, and I missed that one. Again, it's funny. When I catch it, it doesn't work. and when I don't do it, it looks good. But I suppose it's always that case, right? I missed the move just the other day. But I'll do that one next, in fact. But do you guys see this? right? This is definitely bearish. And on the short run, there's some hope of a bullish turn. Now, if you're still a bear, you're just looking at this, okay? Somewhere in here is going to be the turn, and probably right where I showed you, right? That this drops like a ton of bricks on Sunday. Okay? Mm-hmm. Mm-hmm. Ben says, hey, my company's doing 600K and I have a hard time managing all my finances. Why don't you hire an accountant? Jocko? Yeah, an accountant would do that. I don't think a wealth manager would be the right guy. So, yeah, an accountant. Hire an accountant. Not a problem. Joseph says, hey, I bought the updated templates, but they don't install on your MT4. So the only real mistake that you must be making, Joseph, first of all, did you watch the video? No, you didn't. No, you didn't. Right, Joseph? Joseph, I can see you're like, wait, what video? It tells you where you have to go and find your data folder and tell MT4 where to install. Okay, so you have to copy that and paste that into the installer to tell the installer where to put that. Okay, but I can tell you many people have installed it and it works fine on MT4, so it works fine. So that's the only thing that could be wrong. Okay. Then I have no idea why it doesn't work on your machine. Okay. Right? It works for everybody else. That's all I can tell you. So I don't know what's wrong with your individual machine. Sorry, man. I know it might make you feel like left out on the ice flows by yourself, but I mean, I don't know. I don't know. It works. Can tell you that. All right. So anyways, and here's a laggard, but we've already identified this as very, very, very key. And so right now it's holding. Oh, there you go. Thanks, Aaron. Okay. Oh, you don't have to pay for the update. I gave it for free. Oh, yeah. Yeah, they're Windows installers. Yeah. 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 Okay. I don't know why you'd use a Mac to trade Forex. It's bewildering to me, but whatever. Just buy a trading machine. It's a good tax write-off for your trading business. PCs are cheap. You don't need anything powerful. You know, I used to use like $200 machines. So I used to have, like many years ago, I paid $5,000 for a custom-made machine. And I'm like, man, it's not that impressive. So my backup machines, I had 3 computers that I paid $200 each. They were running Windows 7, I think. And this was, yeah, I mean, even at that time, Windows 7 was laughable. Like, wow, where did you even find a Windows 7 machine? But all it does is run MT4, and it's not like running these charts takes a lot of GPU, because all you're doing is updating 1 pixel at a time. So, like, you just need a super cheap, old, used PC. Pop MT4 on there and you're golden. Okay. Okay, that me right. So you paid. Yeah, you didn't need to pay for. You didn't have to pay for an update, but look, you could have paid $1,000. It doesn't change the fact that you're running a Mac. But I never even thought of it. All right. So sorry. Let me move on. I want to do peso. Peso. Can't you see? So there's one way of looking at this, right? Okay. Boop, boop, doop, 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 doop. Nora says big screen. You know, it wouldn't really matter the size of the screen because you don't need anything more than 1080p. And the size of your screen doesn't change anything. The resolution changes. But anyways, let's take a look at this. You might say, oh, Head and Shoulders or something. I don't look at it that way, but whatever. It doesn't matter. What I'm looking for is I want this to fall. I think this week was plausibly, not certainly, but plausibly the end of the dollar strength move and more of a move into neutrality with USD. And that this is a key price based on last week, or is it last month? I guess last month. But also we have this psych level that has been the bane of me for a while. Okay. But you can see that this might have been a good entry on the longer term. I guess this is weekly, right? July 2nd. Yeah, so this is based on last week. And this little move seems to be, or it looks like now anyways, like this is a key level. So I might try to do something like this if I can get it. Okay. And by the way, Joseph, let me go back. I want to be clear. I know I sound pissy. Maybe it's just a bad day or I'm not sleeping well or something. But look, I'm not trying to be pissy. Right? It's just I can't help. But I apologize for sounding pissy. Okay. And so here we are now. In a normal market, I would say, oh, yeah, we're going to go down here to 19. I don't expect that. Okay, I don't expect that during the summer. But what would be interesting is 1950. Is that right? That sounds way too high. 4.6? 4.6B? That doesn't sound right to me. But it'd be very interesting. Go to options plus library. Options, library, application. Your MT4, then installing those. Interesting. Wow, that's amazing, hey? Luis, that's amazing. So I don't know. What do you want to do? Do you want to try to put a trade on this? It's not amazing yet. And I know there's a lot of hope in here. I know there's a lot of confirmation bias. Holy smokes, eh? But at some point, we got to make a play. At some point, we got to make a play. So, right? Something like that. Hey. Something like that. What's up, Darko? That one might be the Wyatt one. So now I have mixed because I've moved over from one to another. No, it's not. No. Boo doo doo doo. But I can tell you the way I'm looking at it, like from a short-term point of view, is you can go to template and you can do day trading bearish bias. Okay, and you can see not a good setup that way, but let me update. Okay. Oh, okay, there we go. This was, okay, so remember this was a weekly bullish exit zone. Check out today's setup. We call this the Asia fade trade, and it's taught in the day trading course. Is anybody practicing Asian fades? So using that methodology, you'd probably have your entry here, not where mine is. Mine tells me I probably won't get it. Yeah, Jim, yep. Now notice, okay, notice the key is understanding market conditions first. And when you get this correct, you know when to enter the market. Okay. And so trading that Asia fading the wrong way never leads you to anything good, right? But what we're talking about is using your technical analysis to confirm market conditions are congruent with your fundamental bias. Okay? Or at the very least, technical conditions have changed and you start entering trades in the proper direction. Asian fades, by the way, is trend trading. And this time of year, based on seasonality, trends will come and go more often. So in normal periods of time, there'll be a general trend that the market is generally doing, like over the course of, let's say, 3 months or 100 days. So there might, let's say there's a couple of times a year where the trend, by and large, will last 100 days. This time of year, the trend might last 5 days. Like there's a difference, right? Like bearish this week, bullish next week. Because it's the time of year. That's all. It's like sometimes when you're out in the ocean, you got a nice trade wind, and it's filling your sails, and you're traveling for free across the world, right? And then all of a sudden, the wind stops. And you can go 100 days with no wind. You're like, what the hell's going on here? Weather. Mm-hmm. I like the way you trade. Mm-hmm. Okay. So it's just like that. Like, I don't expect the wind. I can't rely on the wind. Okay. Okay. All right. In sooth, I know not why I am so sad. What do we got here? Nothing going on here yet. Got to drag this across. Let's update the thought process. One thing I need to tell myself is maybe no more up. No more up. No more up. which is the beginning of maybe down. So maybe I trade down here next week, or maybe it's 2 weeks from now. But at some point I have to make the decision of down, 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 up, up, sell, down, 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 up, up, sell, down, 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 down. Okay. Okay. So we're not quite there yet, but it's a maybe. Okay. It's a maybe. Here's the June 16th date that I prepped you for months and months in advance. I'm telling you, it's an important date, right? Someday. Okay. So let's add to this just for fun. Add the price action pivots. Pachow. Neutral. It says, hey, be cautious, bruh. But if you can start sloping this down, it might give you permission to engage. Okay. So I'm neutral. It's neutral. All right. Cool. I want to look at the yens. And yeah. So on this time frame, I'm bullish, and the market is bearish. Okay, that's a problem. What do you stink? It's a big problem. So I got to handle that properly. Okay, this is the next period buy zone, but let's switch this up. I want to go to day trading swing bullish bias. And it says maybe, just maybe, this is a buy zone for next week. But I feel like I'm being lied to. I was just watching a YouTube video where this guy was buying a car, and it was advertised as an original MSRP of $116,000, but then the guy put $60,000 in upgrades, aftermarket modifications, and that the car now produced 850 horsepower. He's like, wow, that's amazing, and you're giving me such a good deal. So he takes it to, he talks to the dealership, and he's like, okay, was this really a $116,000 MSRP when it was new? And they ran the numbers. They're like, no, it was 88. Wait, there's a big difference between 88,000 and 116. And then he took it to a tuning shop, and they ran it on the the machine where they spin the rear back tires, and they're testing the computer and everything. And they they look at the results of the test, and they're like, yeah, it's pushing like 550 horsepower, which is a lot less than 850. And they're like, yeah, right. And then they talk to the tuning market, and they're like, all right, here's all the things they did. Does it cost $66,000? They're like, well, we can buy all those parts, and they're all very expensive parts. It'll probably take, this many number of hours, and it was a lot to do all those tune-ups. And they're like, well, we would charge you parts and labor $22,000, which is a lot less than $60,000. So anyways, sometimes the deal is too good to be true, right? So I'm looking at this like, I really want this to go up, but let's look at reality first. Okay, because I would love a good deal on a beautiful car that has $60,000 worth of modifications to it that I get for free, produces 850 horsepower. Like, holy shit, really? And it's a Mercedes? Oh my God. And then you find out it's all BS. You're like, whoa, right? Whoa, wait. So I look at this like, I want this to go up for sure. Okay. But technically it's bearish. Okay. That's one problem I have. Two, we're still below this 21 on a 4-hour. Okay, that tells me before it become bullish, it probably will come up here and then come back down and then come back up, right? So I'm like, well, maybe I don't need to buy here. But even if I did this, do you understand? Like, it still looks like a lower low to me. Do I really need to be the first one in this trade? Will you still love me if I buy it 2 weeks from now? Will we still be friends? Will you still talk to me? Like, do I have to be down here? By the way, I told my wife my joke about picking bottoms as a strategy that always stinks. And she's like, did people laugh? I'm like, I don't know, but it was super funny. So anyways, like, yeah, that's sort of a picking a bottom, huh? So I don't know. I don't think that would be my first trade. Okay. And Beast, let's go into a 4-hour. Does that scream buying opportunity? No. They're all trades, though. You have to understand they're all trades. So if you were a scalper, like catching these moves, they're good moves. And there's probably going to be one like this now. Right? I don't know. It seems like a lot of work for this time of year. You're supposed to be hanging out by the pool getting a tan. Right? Right? Oh, she's a wonderful girl. I'm the weird one. All right. But you see that? Like, you could be trading this, and it's totally fine. Yeah. I mean, yeah. All right. So typically you would do this. My challenge is I really want that. And so what do? And I hate selling this when I actually want to buy it, and then I'm like, well, I'll make some money, and then it does this, and then I lose money, but it's doing what I wanted it to do, and so now instead of making money, it's a double insult somehow. So I don't know. Beast is interesting though. I'd like that to come back. Euro, I think, is going to be the clearest move because I want dollar to fall, which means euro has to go up, and if euro has to go up, it's going to take euro yen. Okay. 2.3 too much? No. Is 2 point no. No. I don't know if it's good or bad, but is it too much? No. For example, like you can go with a broker, they promise you 0.1 pips. And then they slip you 1 pip when you enter a trade. Then they slip you 1 pip when you get out, and you end up paying about the same anyways. So never go with the cheap broker, because right off the bat, you're signing up to work with someone that's probably lying to you. Is that the type of relationship you want to have with your execution partner and your custodian? Probably not. Okay. Okay. Yeah, so maybe 2.3. See, I'm so old school. I don't even know what the spread is. It doesn't even matter to me. But when I first started, a spread on a euro dollar was 3 pips, And pound yen was like 13 pips. Right? So you had, like, from my point of view, pound dollar was 7 maybe. So pound, Great British Pound, USD. Maybe it wasn't that much, but it was certainly 4. Okay. So no. So whatever. I don't care, right? Look, make a 300 pip trade and you're like, "Well, but I paid 1.8 pips. Is that too much?" Who cares? Who cares, dude? When you pull the trigger, you don't want to be slipped. All right. So anyways. But I don't even know. Here, I can show you. Well, 18.6, 18. Yeah, no, it's low, dude. Yeah, so that sounds high right now. 1.860. I'll move it over here. I thought I had a tool that actually showed it. Yeah, whatever. Yeah, that sounds high. $1.679. Yeah, that sounds high. Yeah, this looks like what, half a pip, 3/4 of a pip. Baby. All right, so anyway, so I'm there. Joe says what? Joe says, "Hey, I'll tell you sometime." Why don't you just tell me now? What are the odds this goes up now, Joe? I'm looking at this, and I'm not looking at statistical analysis of past data. I'm looking at market conditions. Okay? And so I want to be a bull. I get that. So even if the market has a very high percentage chance of going up, let's say based on historical norms, doesn't have anything to do with this year, right? And and past performance doesn't calculate the Fed tapering in September, stimulus packages being finally spent this summer, people finally traveling for vacation. Like, the historical data doesn't show us reality. It only shows us what occurred for different reasons at similar times of the year, right? But nonetheless, I do want to buy. But I'm looking for evidence, right? This way. 3rd week of August, JK. Yeah, Moreno's right. And just looking at it, right? Like, yeah, so I said I didn't even care to the other person, but yeah, it sounds like you're paying probably too much. Okay. Yeah. So you're saying monthly, huh? So we could take a look at that monthly. Never change your breathless charm. Yeah, but see, so what it does is, I think, like, will it hit 80 first? So we call that an Arctic turtle. Traders are going to sell it off the roll reversal off the 21. Wouldn't you agree? Okay. That if I was a bear, that's what I would do. And then typically you would target the green zone. But I think the psych level is so close, we call this an Arctic turtle, where they stretch a little longer and then everybody gets the frick out. Okay? We have a big move and then this is pulled down in August. Okay? So even if this is a buy for someone, I have to be very cautious because I think there are lots of bears here. And I have to decide, do I buy down here and take a shot, jam a stop, and expect nothing and be happy if I get something? Or do I just wait? And very often, waiting is the better idea. Okay? So that's all, guys. But Joe's saying it's never closed here. Okay? So this tells you this Arctic turtle move of 50 pips will occur one day this month. There'll be one day where there'll be a big red candle, and the next day will be a big green candle. Or it'll be a big red candle that will close like a hanging man. Okay? So there'll be a day where we're here. The market will come down. So now it's a red candle. It'll hit the psych level, come back up, and maybe close like this. And then the next day will be bullish engulfing. And the next day we'll have a slight retracement. So we'll open here. It'll come down, come back up, and be a green day. Do you have the time to listen to me whine about everything and nothing at all? I am one of those mellowed. I am one of those melodramatic fools, neuronic to the bone, no doubt about it. Sometimes I give myself the creeps. Sometimes my mind blame strips on me. I'm heading up. I think I'm cracking up. Am I just paranoid? Well, I don't know. Ba-doom, 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 ba-doom. Okay, cool. Yeah, melodramatic fools. Yeah, thank you. So, so like, what am I doing here? I'm asking myself what I would do and why. And then I'm building the candles. So again, the way that a candle happens, so let's say we are heading down. Okay. And well, these should be daily candles and I have it on 4 hour. But let's just say, based on my thought process, we will not go higher. Maybe we hit 82.50, but then we're going to work our way down. So let's say we do that. So the next candle will go up. So we'll open here. We'll go up to 82.50, stop, head down, okay, and then maybe close. So it would look like this. So here's your open, you go up, back down, and then close red, okay? Then the next one maybe opens here, goes up a little bit. Oh, boy, I didn't mean to do that. That was a drawing tool. Okay, so we open here and goes up and then has a big red day. So it ends up looking like that. And the next one is real bit, opens there and totally goes down. Okay, next one opens here, comes up, closes. So because of it opening and then going up and then closing, right, these are all red candles. Okay. So that's why I'm saying eventually we work our way down. So we open here, it heads down, hits the price, comes back up, and maybe closes this way. If it closes higher, then that's a green candle. I don't even really care. My experience is it's not quite that way. My experience, although, it doesn't predict the future, but still, is that we open here, we stretch down, hit the psych level, Arctic turtle, and we close a little bit low. It's still showing red on the screen, right? But everything's changed. See, the reason it closes still red is there's still dumb bears that are too stupid to take profit because they're, I don't know, sloppy, lazy, greedy, or they have no idea what they're doing. So they're going to pay the penalty. So the next, right, it opens here, but it's going to be straight up bullish this day because these guys get wiped out and more people are getting in. But as these guys get wiped out, the market goes up, which then gets some more bulls in. So the next day is green. You understand that? And I call this an Arctic turtle because it's a turtle that lives in the Arctic in the snow and ice, and it slowly walks up and it somehow, some way, it finds a piece of moss to eat. But he's slow, and he stretches his neck way out, way out to grab that moss to chew on it. And he reaches too far and snap, someone chops his neck off. So in this case, you're supposed to take profit at 80.48. But people can see the temptation at going for 80. So there's going to be one day where there's going to be a 50 pip move down and a 50 pip move up. And it's going to be one day. So all in the same day, they're like, yeah, I know I'm supposed to take profit. Let's go for 80. Let's just get 50 more pips. Just 50 more pips, right? And boom. And that's going to end the bear market because the smart ones will take profit and the dumb ones will get wiped clean. They'll get their heads chopped off. This is Aussie yen. Okay, see, Aussie yen, Aussie yen, Aussie yen. I am one of those melodramatic fools. Yeah. Yeah, I don't know why these don't have watermarks on them. Low. Anyways, so this is tempting for sure on a daily basis. I'm not saying no, but just be careful. So you can do things like, let's make a new template. Okay, what do I got here? Price action pivot points, pivots on a month. Let's change this to weekly. Okay. And then let's go insert indicators, custom, biased pivot points now. And we want to day trade bullish. So I'm okay with all of this. Wait, true midpoints. Yeah, okay, good. All right, so now we see two sets of information. Where we are in the week, three, I guess. Where we are in the week and where we are for next week. And then you have to look at how day trades are lined up. Okay? So this week, next week, so on and so forth. Okay. Based on day trading strategy, this is today's buy zone, which you knew yesterday. Doesn't mean it's buyable. That's what it is. Okay, by definition. Cool. So if you're a bull, that's a beautiful little front run. This is a beautiful Asia type trade. And what it's telling you is tomorrow, Monday, you buy it near 52. Well, Monday's trade might occur on Monday. Monday's trade might occur on Sunday. Monday's trade might occur today on Friday. We call that a Friday front run, okay? Or Sunday market open type trade. Nonetheless, if you are a day trader, you are going to do this. Or you're not a day trader. The second part is, if you were trading in more normal market conditions, which you're not, you know this is next week's swing trade plan. So you would, maybe today, buy a retracement to 52. And your target now is 55, maybe 56. So if this was September, in fact, I'd have you go further, but let's say if it was October, okay? If it was October, I would say, yeah, you would buy the dip. You buy at 52, you're going to 155, and you should be terribly, bitterly disappointed if you don't make 300 pips on this trade. It'll be a sad week indeed, because that would be in less than a week. Probably by the time you hit Tuesday or Wednesday, you're already exiting and you're like, oh man, right? You might hold on and go a little further depending on if it kicks off 52 or if it goes down a little more. Okay. But a real perfect trade here would be like something like this to 56. And you feel good because you're like, oh, I got 333. Or you got, 400 and you're like, okay, great. I tend to like a weird magic number for me. And I think it's psychological, obviously, confirmation bias. But my weird number is 333. For some reason, I hit 333 and I think, oh man, 333, there's the magic number. Should I take profit? Well, I don't know. I have every fundamental. Oh, son of a bitch! And it comes down like 180 pips over the course of 2 days. I'm like, oh, you mother... I knew it. I should have got out at 333. Now, of course, it's all made up, but I see it all the time. Right? I see it all the time. Oh, man. So anyway, I'd probably bail right in the middle, and it's a simple little swing trade. Right? Okay. Well, Mr. Kennedy, the gravy train is not over on a carry trade. Nothing's supposed to happen over the summer, and you will get paid every single day of the week. So if it's a carry trade to you, then there's no big deal. See, a carry trade, you make a decision, and you say, I'm going to be a lender. You're like a bank. And you say, I'm going to lend the good people of South Africa some US dollars. Or you can use your US dollars to borrow euro and then lend the euro to the good people of South Africa. Okay? And for that, you're going to charge them a fee, an interest rate. Cool. It's just how it goes. Okay? Now, you face exchange risk. This is why there's currency hedge funds. You could hedge that out for people. Well, in this case, you jam your stop. So if the exchange risk goes against you, you're knocked out and you didn't lose any money anyways. And you had an opportunity to make money from South Africa you did your best. You're trying to lend the good people of South Africa money. But their currency went to shit. So you're like, oh, well, okay. And you're out. Not a big deal. But if you do it right, their currency appreciates versus the dollar. And this actually benefits you because they're going to pay you back with money that's worth more than before. So you're like, okay, that's good, right? So you lend them money and you're like, okay, well, that's all icing on the cake, but you're going to be guaranteed whatever it is, 6% on your money, which is pretty good in a world where 1% is attractive. 2% is ridiculous, but you're collecting 6. Come on, man, right? Mr. Kennedy, you're charging 6. But then wait. You're using your money as collateral and then leveraging it 10 times. So you're actually borrowing money, using your dollar, borrowing money, and then lending the money you borrowed to South Africa and charging them 6%, which means, right, based on your leverage, now you're earning 60% a year. And your stop is at break even to manage your exchange risk. So now you're golden. You're like 60% internal rate of return. If you're leveraged 100 to 1, shut the back door. Seriously? Okay. But the thing is, you are managing your exchange rate risk. You can't lose. And you will collect the equivalent, depending on your leverage, 600% divided by 365, okay, is put into your account daily. Then you say, wait, it's closed on the weekends. Okay, well, on Monday, you collect interest for your trades on Monday, Thursday. And then on Tuesday, you get paid for trades on Friday. And then on Wednesday, you collect interest for trades you had on Monday, Sunday, and Saturday. So on Wednesdays, you get paid for 3 days of interest payments. Cool. But then you're like, wait, it was a banking holiday on Monday. Now what? All right. Then on Thursday, you get paid for Tuesday, trades you had open on Tuesday, trades you had open on Monday, trades you had open on Sunday, and trades you had open Saturday. You collect 4 days of interest. Now, here's the cool thing, guys. Here's the really interesting thing. You could open a trade. Let's say it's Thursday. Well, I guess it has to be Wednesday at 5 p.m. Wednesday at 5 p.m., Thursday begins, right? So at 4:59, it's Wednesday, and then boom, 5 p.m., boom, it rolls over to Thursday. And that day you get paid interest. So it's Wednesday night, if you will, okay? Now, here's the interesting thing. So let's go back to Wednesday night. It's Wednesday, and it's 4:59. And you open a USD South African Rand short trade. 30 seconds later, boom, it becomes 5 p.m. And technically, it's now Thursday. And I'm using New York time, by the way. So now it's technically Thursday, and you've been in the trade for maybe 35 seconds. You'll get paid interest as if you had the trade open all day Saturday, all day Sunday, all day Monday, but Monday was a holiday, and then Tuesday. You were in it for 30 seconds and you get paid like 100 hours worth of interest on your leveraged loan to South Africa. Okay? You think that's good? I know someone that claimed they made $20,000 in that 35 seconds just on the rollover. And I yelled at him for being stupid. So anyways, if you're in it for a carry trade, Mr. Kennedy, it don't matter none. You're guaranteed to collect interest every single day. And if your stop's at break even, you basically are hedged against, it's not really a hedge, but you're protected against exchange risk, because if it comes all the way back to the point where you're going to lose money because the dollar got strong and the South African rand got weak, and at that point, if it got any weaker, they'd pay you back with money that's worth less than the money you owed them. Now you're like, or you lent them, I mean. So now you're like, wait, that would be a loser for me. Well, you get knocked out of break even. You're like, I want out of the trade, and you go to cash. Okay. So think about it mentally now. If you're going to run a fund that's high yield, you're not really interested in the pips. People are interested in the carry, the swap. Okay. Now imagine it just works out. Some of these trades you could be in for years and years and years. You don't do any new work. You don't do any new research. You don't do any new thought process. But you will get paid today. And on top of that, you could end up being up like 1,000,000 pips. If you were in some of these trades for years, 3, 4, 5 years, and you got lots of trades open, the thing is you'll have so much in pips, it will make your interest payments like a drop in a bucket. So you're like, okay, you're collecting $100 a day in interest, but you're up, $120,000 in pips. And you're like, you know what? Just give me the 120,000, right? And it just takes over. But my point is, if it's a carry trade, then you don't have to worry about these things. Oh, but what if? It doesn't matter. That's not why you're in it. And I'm telling you, when you embrace it, it will just be a characteristic of the trade. And sometimes it's good and sometimes it's bad. JK says, are we still fundamentally bearish on the dollar? Well, the fundamentals haven't changed. So the answer to that is yes. But that's not the only thing in the world that matters. So the way I teach you in my book and the way I teach you in the training course is, okay, yes, you have to have a bias. You have to know if you're a buyer or seller. But then you look at the market and say, what are the market conditions? Okay. And so what I'm teaching you now, JK, is like, okay, this is pound yen. You want pound yen to go up by the end of the year. And you're certain of it based on your macroeconomic research and your fundamental analysis of central banking policy. And you say to yourself, you are absolutely, totally, 100% certain pound yen will be worth more in December than it is in July. Doesn't mean you buy it today. Now, you might buy it because you say, well, we're 2 standard deviations from a mean and that it's most likely to revert. Well, if you're going to do that trade, use options. Okay? Because you're basically doing a Black Scholes. But even if you have Scholes, I forget how they spell it. Anyways, you're doing a Black-Scholes LTCM trade, and even though they won Nobel Prizes for their awesome algorithmic models, they blew up their multi-billion-dollar fund because they sucked as being a trader. Okay? So, again, you could buy this because, right, that there's a certain chance of reversion. Or, hey, 17 years in a row, we never closed below that. Well, on the 18th it did, so why does it matter? Okay? So, anyways, the first part is you have done your research and you said, oh, well, we'll be at 175 by the end of the year. This is only 155. That's nothing, right? Like, this is going to go up thousands of pips. Okay? Well, it doesn't mean you have to buy here today, because market conditions are clearly bearish and you're a bull. So you either buy this and jam stops and protect yourself from downside risks, and maybe it does this next week and you buy it here and jam your stop, or you buy it here and jam your stop. But you know it's risky in the moment because you're a bull in a bearish world. Dude, you should probably not even be here. You should be out on the jet ski. And then people are like, hey, what are you doing out on the jet ski? And you're like, I'm not losing money trading Forex. And they're like, cool, man, cool beans, right? And then one day, the market conditions will be bullish. Now, sit down, shut up, and get ready for the next trade. Okay? So people, I don't know. I mean, I say it a million times over 2 decades, but people forget. They're like, but Wayne told me I'm a bull, and Wayne told me I'm a bull, and Wayne told me I'm a bull, and they're buying lower. Dude, I've never said keep buying. Like, I've never said buy lower lows ever. Okay? This is interesting, but I would rather have an uptrend and be a bull and buy dips. In a bullish trend, buy dips. That's what I've been saying for 20 years. Every single day. 5,000 YouTube videos of me saying, if you're a bull, look for a bullish trend and buy dips. If you're a bear, look for a bearish trend and sell rallies. Using Elliott Wave, using Fibonacci, using price action, using pivot points, using moving averages, using, I don't know, dude, sell the frickin' rally if you're a bear and the market's falling. Okay? Cool, right? So stop buying dips in a falling market. That's all. So I can see this. This is cool. Hey, this is a mean reversion trade. Scalp it, man. Scalp it, bro. If that's what you want, take it on a day trade. This is a day trade. But the day trade also says exit here. Why? Because every single bear on the planet is going to short in your face. And that sounds terrible. They're going to short right in your face. They're going to short all over you. They're going to short on your shoes, Bubba. Okay? You're going to have footprints on your back, right? This is you kind of going out in the world and exploring. Hey, is this bullish territory? Okay. Do you know how to spot a pioneer? You guys know this one? Do you know how to spot a pioneer? Someone going out in the world to explore to see if this is good land? You guys don't know this one? The pioneer is the guy laying face down in the mud with arrows in his back. Yeah, Robin knows the Viking way. Yeah. Yeah, Zhangyi got it. Yeah. So anyways, good luck. You're a very pioneering spirit. Hey, the market's bearish, but let's buy it anyways and see what happens. Twack, 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 twack. Arrow. So anyways, statistically speaking, using these statistical algorithms, doesn't mean all statistics, using the tools we're looking at, okay, this says that. But going back to like, who said it? JK Markets, I'm a bull. That is true. Has anything fundamentally changed? No, it has not, in my opinion. So I'm a bull in this. I'm a bull. So how much money should I risk? Not much. How much patience should I have? Like, who has a lot of patience? Besides doctors and dentists. I don't know who has patience. Like a watchmaker, I guess. Yes, no, Morena's on the other side, which is fine. And that's why I say, look, so Morena's like, she bought it. Cool. It's buyable. But it's not a fundamental, it's not a fundamentally based trade. It's a technical based trade, which is perfectly fine. And that's why I say, look, based on this, it says, okay, you need to exit here. But I'm also looking at it from now at higher time frame, and do you know what it says? You should exit here. So they both say the same thing. Now, it's using different methodology, of course, over different time frames, but going back 2 weeks, it says your two standard deviations from a mean right around 53.50 to 53. So somewhere around 53, if you're long and profitable, hey, wink, wink, nudge, nudge, you should probably consider, you don't have to, but you should probably consider taking some profit. If not, getting out of the down trade. Because statistically speaking, there's a very, very, very good chance that we continue down. So Morena might take that trade too, which is great. Okay. But a lot of people mix their strategies, right? And they don't understand what's going on. So generally speaking, today's trade looks like this. This is a day trade, guys. This is a buy. This is an exit. And statistically speaking, right now, in my humble opinion, if you don't get up here, you're basing the results on luck. And most people can't take this trade down here. And, right, they don't have the discipline or the risk management to afford to be able to do it. Nor will they have the patience, discipline, and stuff to exit here. So typically, if I showed you a trade like this, because I've done it for longer than most of you guys have even been alive, right? If I start showing you trades like this, you're going to start buying it here, which is really bad. And then you're not going to exit here because you think you're going to make $1 million. And it's all FUBAR, effed up beyond all recognition. FUBAR. So I'm like, I can't show you that, but I've taught you how to do it. Okay. But you have to have the discipline to get in here as a day trade and the discipline to get out here as a day trade. And many people lack the discipline, yet alone the knowledge. So just like, whoa, I'm not going to teach that. But like, I'm not going to yell at Moreno for doing that. I'm like, dude, what are you doing? What the hell is wrong with you? It's a day trade, yo. Okay. But I'm worried about the market still technically being bearish. I'm looking at the mean, right? The slope of the mean over 2 weeks. And I'm also looking at the moving averages, which is the basis of my book. And if you read my book, it says, yeah, no, don't buy this. Okay. It says, yeah, no. So guess what? I'm conservative to neutral, waiting for a bullish move, right? Snafu. Yeah, I like FUBAR, though. I think that's from World War II. Maybe it's older than that. I don't know. Let me tell you something, and we'll end it here on the weekend. I want you to think about this. Do you know how to get rich? A, start with some money. Okay. But B, do you want guaranteed wealth? The two components to wealth is how much money you start with and how much time you have. And everybody wants to cut out the time because they don't have the money. Do you understand the flaw there? It's really poor math. In fact, it's a pipe dream. By pipe, I mean crack cocaine pipe dream. I got no money, and therefore I'm not going to put in the time. Now, it's funny, right? So there's two variables. How much money you got and how much time you put in. Well, I got no money, and I'm not going to put in any time. I need to speed this bad boy up. I need to get rich now because I need to buy a car. Well, dude, as soon as you buy a car, you're poor again. So I don't understand. It just doesn't make sense to me, right? So it's funny. So think about it. You're like, well, if I don't have enough money, at least I got the time. And so over the next 10 years, you can do two things. Learn how to create value and save money. And in 10 years, you will be knowledgeable. You'll be rich in brain. Okay? And you'll be stacked. And now, from that point on, the next 10 or 20, 30 years, you are going to change the destiny of your entire lineage. You, your children, and your children's children will live in a better neighborhood, go to a better school, think differently, be surrounded by different people, and live radically different lives. And long after you're dead, your lineage will live a significantly different path. Or you can make a lot of money, buy a fancy watch, make a lot of money, buy a fancy car, and then die poor. Because your watch is going to be worthless, your car is going to be depreciated to zero, probably not going to be a classic, and then what? And that's that. Oh, but I have a 110-inch 4K TV. Oh, it's cool, man. It's true. I have a 110-inch 4K TV. It's really nice. It's really nice. It's not going to make my children smarter. It's not going to put me in a better neighborhood. Okay? Assets, guys. Asset. Everything you need is assets. Assets. Invest into assets, buy assets, own assets. Okay? And the biggest asset you have is you, your brain, your fortitude, your work ethic. In the beginning, okay? In the beginning, that's most important. But it's interesting because I come from this world. This is what I was taught. I'm a Canadian. I grew up in rural Canada with no money, no papa. I was told if you work your ass off, you will succeed. And then shut up. Nobody cares about your emotions. Okay? Those are the things I was taught. Work your ass off. Keep your mouth shut. Cool. But isn't it interesting? But that only gets you so far. I like the work ethic I got. And I love the shut the F up, keep working attitude. But ultimately, that's a message for the working class, isn't it? What I should have been taught is your money never complains and your money never sleeps. You can waste your money on entertainment and false happiness, fake happiness. Hey, you don't feel good about yourself? Some cocaine will be good. Having trouble loving? Hey, do some ecstasy. Oh, you'll be full of love, and then you'll be out of love, and then you'll need more ecstasy, right? Meanwhile, you wasted all your money on drugs. And guess what? Now you've lost your brain, and you lost your reputation, and now you're in a worthless situation. Very hard to get yourself out of that. So ultimately, you want to stay poor, and you want to, in the beginning, have the working class attitude of your work ethic and your discipline and your grind is going to be what takes you to the next level of success. And that whole period, and it might be 10 years of grind, you're not going to make any money. Or if you make money, you're not going to spend your money. What you will do is you're going to save that money. You're going to save it. You're going to save it for 10 years. You know the discipline it takes to not spend money for 10 years? But I'm telling you, you're going to be rewarded. And that's the secret of all finance, by the way. I teach economics, but finance is the flow of cash flow over periods of time. So you got to have cash and you got to have time. So you're putting in your grind to getting smart and educated and talented and skilled. Okay? You're a real currency trader. And you got yourself stacked. And now you grow that account and grow it and grow it and grow it. The patience and discipline to never pay yourself, but to keep growing it. Stay poor. Don't take money out of your Forex account to buy a TV, for Christ's sake. Okay? This watch is a nice watch, custom made. Oh, yeah. There's only I think less than 100. Look at that. It's nice. Right? Doesn't even have a brand name on it. There is no brand name. Cool. It's got all these time zones. It's really pretty. You see all the back. It rattles now. It rattles. It's worth less. This would be a dumb thing to do with your Forex money. Now my wife bought it for me, so great. So she wasted her money. Good. Make your wife buy you a watch, but never take money out of your Forex account, okay, to buy a watch. What you want to do is stay poor and drive and drive and drive for success. Have that working class work ethic of staying late and doing the best job you possibly can, right? Like a craftsman. Then down the road, you will also fully appreciate the value of your money working for you, because you realize how hard it is to do all this stuff, and you'll refine yourself. I've seen over the years how my trading, not the techniques and not the tools, but sort of how I've flowed from trading a 1-minute chart every single day for a year to expanding to a lot more swing trading and position trading and fundamentally biased trading, and having appreciation for all the trading strategies. That's really cool. But that's down the road. And then what you're trying to do is you're going to say, okay, I got this pile of cash. It took me years to grow this. How can I get the best return for the appropriate amount of risk? If I want more return, I need to add more risk. If I want less risk, I should expect less return. And then you start tying that into the normal ebb and flow of money in and out of the markets globally based on things like seasonality. Then you'll say, well, certain times I want more risk and other times I want less risk. And you're like, oh, this is so good. Okay, this is so good. But 95% of people never get there because they start with no money and they don't want to put in the time. And it's all about money and time. So you can put in the time and grow your small stack into a bigger stack, slightly bigger, then slightly bigger and slightly bigger. But the amount of money you make in year 9 to year 10, that 365 days between year 9 and year 10, you'll probably make 3 times the amount of money you made in the first 4 years, right? You'll make in 1 year the same amount of money you made in 4 years. So imagine year 11 and year 12, and all of a sudden year 15 is crazy. That you're like, man, in 1 year I made what I made in 10 years. Cool. And then you take that money and you still don't buy a TV. You still don't waste it on a car. What a waste of money. Toy. What you do is you buy an asset. Now you have a Forex trading account and you're very skilled. You got 15 years of experience. You've grown it up. That's really good. You take some money out because you really don't need that much money. Plus, you could, if you're going to live in your house, then great. So now you have 2 things. You have an asset that's called a house that appreciates in value and provides you with the service. But you also have a Forex trading account that slowly grows year after year after year. Now you own 2 assets. Oh my God. And you know what? 5 years later, you refi your house and you put $80,000 in your pocket. Now, what do you do with that? Well, you can buy a TV or a watch or a car. Or you can leverage that and put that into assets. Hey, you could take it out. They're charging you, what, 3.5% a year? Put it in the stock market if you want and make 15% a year. Free money. So the thing is, you want to stay poor. You want to have the working class ethic, but 10 or 15 years from now, you'll realize the upper class strategy of do everything you can do to own assets, grow your net worth, grow your wealth. See, rich people work. You understand that? A doctor works for a living. They make a lot of money. They're rich. They drive nice cars. Doctors drive Maseratis. Used Maseratis. But nonetheless, I have doctors in my neighborhood. They drive Maseratis. I'm like, they're poor. Okay? Lawyers, poor. Hey, they might make $1 million a year. They're still poor. They exchange their they exchange their time for money. They work for a living. They're like a landscaper. Right? Think of it. My landscaper mows my lawn and blows the leaves. My dentist picks food out of my teeth. What do you do for a living? I pick food out of people's teeth. Oh, great. How much does that pay you? Well, I work 8 hours a day. It's kind of a shitty job. My back hurts all the time. And people have bad breath and people whine and cry and there's blood everywhere. As soon as I bring out the needle, people panic and, oh, life is tough. And I stab someone's tongue by accident and we might have a lawsuit coming and, oh my God, blah, 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 blah. But I make $300,000 a year. Okay. Maybe that makes you rich. You're top 1% in the United States because you provide the service of picking food out of someone's teeth. Great. Wealthy people, they don't have to get up in the morning if they don't want to. Wealth comes from owning assets, and assets, by definition, appreciate in value and ideally provide an income. And once you own enough assets and have enough cash flow, you don't have to work. You like Forex. Hey, man, you can work, you can sit down at your desk one or two hours a day. That's enough for most. And your money is working for you all day, all night, collecting interest over the weekend. Even if it's a holiday, collecting interest, Bubba. Okay? And you get to that point where you're like, okay, I like this. I like my assets working for me. I love my money making money while I do nothing. So while you do that, then you start to think, okay, how do I protect the assets I already own? Because my assets love me. I have beautiful assets, right? Okay? You're like, how do I protect, but also encourage my assets to keep providing me with cash flow? Okay? By the way, I learned this attitude from the Middle East. I met a lot of wealthy people in Dubai and the surrounding area. And this guy, I can't remember who it was, this potential investor. I didn't take money from him because it was a complicated deal. And he's like, oh, I got to go through 9 different banks. And I'm like, dude, I can't do that. But anyways, he leaned forward and he explained a bunch of things. Like we had conversations of why, like in the Middle East, you can't earn interest and all that kind of stuff. So he wasn't interested in my carry trade strategies. But, now I've done Islamic finance at Harvard, a student, by the way. So I understand these things. But he also leaned forward and we had like sort of a frank conversation. He's like, look, here's what happens. This is how it works in Dubai, which is great because it was my first trip. And he says, look, I can give you $100 million. But here's the thing. You can't lose a penny. What we count on is that you can provide us and you have to tell us. And we will decide. But like, if I gave you $100 million, how much can we expect to earn? Am I going to get 10 million a year? Am I going to get 30 million a year? I need to know. But here's the thing. We live off the 10, 15, 20 million that you're going to provide us. That puts, right? That buys the Lambo. That puts gas in the yacht, right? And that pays for the jet and the house and the villa. And we need to know that's there. So I can give you the 100 million, but we live off the 25 million that you pay us. And then that 100 million has to be there, so you trade it again. And once again, we live off the 25 million. Here's the thing. You lose 1 penny of the 100 million, and I will have you killed. And you will be buried in the sand dunes between Abu Dhabi and Dubai. Because the 100 million cannot be risked. But you must provide us the money that we need because this is the lifestyle we live. You have to put gas in the yacht. If you can't do that, you're dead. Okay? And I'm like, oh, the principle. It's all about the principle. Don't lose wealth. You must have the asset. The asset will take care of you. It's all about the asset. The asset. You must own assets. And at some point, you no longer work. You don't work. Your asset works. In that case, what they're saying is they don't work. 100 million was small for them. But they're like, I can give you 100 million. But how much are you going to give me? Oh, I'll pay you. Sure. Yeah. But where's my money? Because I live on the return and the principal is always there. Always there. Always there. Always there. The principal is always there. You cannot lose the asset. And I'm like, that's right. You are absolutely right. You are absolutely right. The more assets you have, the more freedom you'll be provided with. Okay? So, build up your Forex account. Great, but that's just cash, guys. You don't want cash. Okay? Then you own it, buy some asset with some of your cash, grow your account again, buy another asset with some of your cash, grow your account again, and keep it going. So you got some return coming here and some there, and And when you die an old person, your grandchildren will be bankrolled so that their grandchildren will be rich. Okay? Right? It's the only way out. It's the only way out. I'm telling you. And it's weird, like, when do you go to an Ivy League school? So again, I grew up humble. And that's the best thing about me. There are a million things that are amazing about me, but the best thing about me is my modesty. Okay? So I grew up modest. I eventually go to Ivy League schools, right? And here's the thing. They're taught this already. They already know. And Harvard didn't teach them. Mom and dad, grandma and grandpa, great-great-grandpa made life good for grandpa, who made life good for dad, who made life good for, Jack and Jane Vanderbilt the seventh. Okay. And they realize, like it's interesting when you meet people that they don't think like regular people. They just don't. And so they were educated before they even got to Harvard. And what I'm trying to share is what their daddy taught them. You have to step up and ask for more because you believe you deserve it, but also because you can back it up. You work harder, yes, that's always going to be asset from a working class point of view. But at some point, you get to another level where, like, they look at you like, why do you work so hard? Well, because of all these good qualities I learned from my working class upbringing. They're like, yeah, you're funny. Because, working hard doesn't, right? Working hard in the beginning is going to get you to the point where you realize having your money work for you is the key. Like working hard. That's what my gardener does. I don't work hard. I wake up in the morning, drink a glass of champagne, take a bubble bath. And then by noon, check my bank account and I'm richer than I was last night. I'm like, what a freaking great day. And so you got to have that always in mind, right? So bring your strength right now. Your strength is your hunger and your desire to succeed and lift yourself to a new level. But remember, you can't cut the time and you can't cut the money. Okay? In the beginning, you'll earn return, which means you'll be rich. You might make money, but you're still putting in time for money. But there will be a transition if you do it right. Down the road, because you put in the time and you're growing the money, suddenly the money is taking care of things more than the time you put into it. You can put 1 hour a week into Forex and make money. That's what a swing trade is. 1 hour a week. You even know which hour to do it. But it takes skill to know things like seasonality and, what did the central bank just tell me? Ooh, okay, that changes things a bit. Okay, you still have to have skill. I'm not saying it's easy, but you have to understand. You don't have to work 12 hours a day, 15 hours a day trading Forex to be a success. You can work 1 hour a freaking week and be a success. But now you're thinking, all right, well, I got to protect my principal and I got to balance the amount of risk I take based on the rewards I expect. And that's dictated by market conditions, market sentiment, seasonality, central banking policy, and how this one economy that you're investing in competes in a global market of buyers and sellers. Okay? The United States is a buyer. Australia is a seller. So in a normal market, what should happen? Well, if the United States is a buyer, that means they throw their money away. In a normal market, the dollar should be weak. The media doesn't understand this. Business schools don't understand this. Economic professors don't understand this. It's crazy. I don't understand why they don't understand. But we're a buyer. We buy stuff so the money leaves. The dollar's weak when things are good. Now, Australia sells stuff. So if things are normal, the Aussie dollar is strong. Why? Well, I bought Shiraz. Okay, I do this. I buy Shiraz, Australian red wine. Spicy Shiraz, right? From the McLaren Valley or the Barossa Valley. Great. So what do I get? I buy a case of wine. It shows up. But what did I give up? I gave up my money. So my money goes into interbanking system, the global market now, the world of money. Literally the ones and zeros floating around space. And I put my money there because it goes to this place, this heaven of money, right? This place, and my dollars go there and it gets exchanged for Aussie, and Australia gets their Aussie dollar. So the Australian dollar appreciates. There's less Aussie dollars in the world. More U.S. dollars in the world. I gave up my U.S. dollars to buy Aussie dollar, gave Aussie dollar to the wine company, and now I get wine. So, right, dollars flow to the interbanking system. Supply of dollar goes up, value of the dollar goes down. Right, I exchange it for Aussie dollar. The supply of Aussie dollars goes down, the value goes up. I give my Aussie dollar to the wine company, and the wine company ships me wine, and now I got wine in my cellar. What just happened? I bought wine, Aussie dollar went up, US dollar went down, and everybody's happy. And I'm only doing that when I feel good about myself, and I feel good about my household wealth, and I feel good about my income, and not just income today, but income tomorrow, income next year. And I feel safe where I can buy a case of wine from Australia. And because I feel good, dollar's weak, Aussie dollar goes up, and I'm the one drinking the Shiraz. And I say, ooh, spicy. I taste the pepper. Okay? Right? I say, oh, the bouquet. So we have to do all these things. If we understand that process, you can trade at 12 hours a day. Hey, man, I've traded 24 hours straight. But you can also make other investment decisions that takes minutes, and you can literally work. I've worked some weeks 12 minutes. I walk in, I'm like, there's my line, double check everything. Yep. That looks good. Yep, got congruency around the board, right price, right time, right time of the day, time of the week, right, month, and seasonality based. So I'm like, I love it across the board. Well, I'll buy that. Well, let's go look at the yens. Oh, that looks good. How about gold? Oh, yeah. Oil, yep. Done. Have a nice weekend, everybody. I'll see you on Monday. Thanks for being part of the Forex.Today YouTube community. Please click the like button. And thanks for being part of the FX Bootcamp community. And I will see you guys Monday, huh? Yeah. I can't remember, too, but I think I might be in Florida on Monday. But if you don't mind, I'll bring you with me. I don't know these things. I think, yeah, I might not be here on Monday, but you'll be with me. How about that? I won't be here, but you'll be with me. So I'll see you wherever I am. I don't know what's going on. Okay. So thank you for being part of my team. By the way, I really want you to succeed. I want us to work together. So please get this set. Okay? Please get this set. Get yourself taken care of. Get yourself squared away. Get your trading in order.